Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video I'm going to be talking you through a technical indicator. The one we're going to be talking about today is the Moving Average Convergence Divergence. It is a popular one. The sort of default parameters that most traders will tend to look at, this is like the default that you get given when you bring up the Moving Average Convergence Divergence on most trading software. It pretty much tracks the difference between a 12-day moving average and a 26-day exponential moving average. Okay, now you can see these moving averages moving up and down here in this panel below. This is a Bitcoin chart, by the way, on one-day candlesticks, and pretty much when you see the 12 EMA crossing above or below the 26 EMA, that can be viewed as a potential shift in the market's momentum. So let's go back in the history of Bitcoin, the last couple of months, and we can look at some of the times when this has occurred and how the market reacted and whether it potentially works as an indicator. And we can start off with this sort of mid to late June, where the 12 EMA went above the 26 EMA, and that was when Bitcoin was about 21,000. So we have risen since then. There has been a clear shift in positive momentum, which that did signal. If you go a couple of weeks earlier than that, you had this big shift in momentum where the 12 EMA dumped below the 26 EMA, and that was very much a good sell signal at the time. That was when Bitcoin was around 30k and then dumped towards 20k within a couple of days. Other times, there's been a crossover. Yeah, the 12 EMA going above the 26 EMA here in mid-May wasn't really a good buy signal, to be honest. This one was a very good sell signal back in early April, where the 12 EMA went below the 26 EMA when Bitcoin was up here about 46k. And we can keep repeating this, and it's hit and miss, but the MACD, as people refer to it, I think is worth monitoring alongside an arsenal of other technical indicators. And then obviously you got to keep monitoring all your fundamentals as well alongside that. You want to be looking at MACD, relative strength index. Then you want to be looking at chart patterns or trend channels or trend lines, support, resistance, long-term Fibonacci's, all that kind of stuff. And then when you get a confluence of these technical indicators pointing in the same direction, perhaps you get, like when you're here, 5th of April, perhaps you get this crossover happening, which is a bearish sign, and you also have the relative strength index indicating that you are overbought, which is potentially a near-term bearish sign. And then potentially, I don't know if you do it, if you had it in this instance, but potentially you're struggling to get above resistance, which is a short-term bearish sign, or struggling to get above a moving average. You want to combine a confluence of these technical indicators when making your trades. But anyway, guys, that is the Moving Average Convergence Divergence, or MACD trading indicator. Hope you enjoyed the video, and I will see you all in the next one.